Let's go back over here to the corn and visit with Oliver Sloup about all of this. Oliver, there's been a lot of talk that maybe this weather concern about the corn market may be behind us now. Are we starting to shift to another type of a corn market that's driven by some other factor, and what is it?
Yeah, I think the shot clock is certainly winding down to the final second as far as potential weather scare goes for this corn market, and I think that's going to keep a little bit of a lid on the upward mobility. All in all, we've been kind of settling in a little bit of a range after breaking down earlier in July 10th, that big breakdown. We're basically in the range 330 to 340. Fundamentally, what's going to break us out about 340, I'm not really sure. Potentially some better export business could do that and spark a little bit of a short covering rally, but that's, nothing to write home about or hang your hat on going forward. The thing that we're concerned about is the weakness in the U.S. dollar. We made 52-week lows today in the U.S. dollar. If that dollar starts to strengthen up off of these lows, that's going to put a little bit more pressure on these grain markets here in the near future.
Okay, well, we've got a lower dollar, but we've also got a lower wheat market here today, too. So isn't the dollar pressure off of this wheat?
Well, the wheat has been a little bit of a whipsaw trade here over the past couple of weeks, trading in really wide ranges, about 30 cents over the last couple of weeks. We're right at the 50% retracement, 532 for that September contract. And that 50% retracement is basically the middle of the range from the contract highs at 592 3/4 in January down to the contract lows of 471 here recently. That's where a lot of interaction between buyers and sellers has happened over the last year. If the bulls can't defend 532 throughout this week's trade, potentially we go retest that $5 mark, which was a breakout point there in the beginning of July.
So that recent rally that we saw over in the wheat market there a week and a half, 2 weeks ago, all of that ground behind us now. Now what happens? Is there any other chances here for a rally?
It's going to be tough. Anytime you get wheat in the mid $5 range, I think history would tell you to lean on the sell side, which is what we're doing. And as I mentioned about the U.S. dollar being relatively weak, 52-week lows, if that starts to bounce a little bit, that's going to put additional pressure on this wheat market. And I think we could see wheat ultimately retrace some of these gains that we've seen over the last month, take us back towards that psychologically and technically significant level of $5.
Okay, and that dollar is down 895 points right now on the dollar index. We are south of 94, clear down into the 93s, 93,485 to be exact. Oliver, stay with us, and folks, you do the same thing. We're going to come back in just a moment and look behind the curtain on the livestock trade next.